Hello, everybody. How are you doing? Welcome to my channel. I'm Eric from 5minuteinvesting.com, and today our friend John recommended us a stock, and it's EA, Electronic Arts. It's a gaming company, and for those of you who are not familiar with gaming, we'll go through some of the major franchises and the product and what they do and so on. So, right now, John thinks EA may be a good buy, and because the price has dropped. And yeah, we'll see. And that's what this video is all about. So right now, I'll minimize my face over here. So, EA. The major reason why John thinks EA is a good buy is because of the latest news related to Star Wars. So, obviously, Star Wars is a great franchise, great game, and EA developed Battlefront II, which we can see here. Star Wars Battlefront II by EA, and then within that game, they have something called microtransactions. So basically, for example, if you want like an extra character, so in the beginning of time when you buy a game and you spend $60 buying a game, you get the whole game, 100% of the game. There's nothing that's held back. But nowadays, the cost of making the game is rising, and the demand from the gamer is rising, so they want a better quality game, a more realistic game, better sound effects, blah 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 blah. And so what companies do now is they give you like most of the game, maybe 80% of the game, and then they hold back a few important pieces, like maybe you got to unlock a few characters by paying more money. So let's say you have 5 characters and they'll give you 3 to start, and then you can keep playing without the 2 remaining characters. But if you want the remaining 2 characters, let's say Darth Vader or Luke Skywalker, then you got to pay an extra $20 or $10. Or if you want some sort of costume, then you pay extra money in order to access it. So basically, you get 80% or I don't know 60% of the game, and then you need to either earn it through the game or you pay for it to unlock those additional parts of the game. So essentially, the cost of the game is actually much higher, and people are so angry that EA implemented the whole microtransaction system on Battlefront 2. So this is the poster for Battlefront 1, but what EA released or about to release is Battlefront 2. So I took the time and I set up a few tabs here, which we'll go through in order. So the first one is just looking at EA's latest games. So A Way Out, which is a prison break game, which I think there's a lot of positive expectation on it. Obviously, I'm not super familiar with games, so John would know better. And second, UFC, a boxing game. Battlefield 1, super famous. A lot of people love it. My uncle, who's 40 years old, played this game, Battlefield 1. It's a first-person shooter. And yeah, it's placed in World War I. And Sims 4, this is a simulation game of like people living in a city and so on. If you play games, you probably know what it is. So Sims 4 means it's the 4th version. So that means it has a loyal fan base, obviously, because people would start playing in Sims 1, 2, and 3, and 4. And I know a friend, a personal friend of mine, that would spend hours and hours building her life on Sims 4 instead of her life in real life. But that's a story for another time. So again, Star Wars, this is where all the microtransaction happened, and where all the news and how everyone is hating on EA. So then that's why investors panic and start shorting it, which we'll get to shortly. And again, Need for Speed, another racing game which is quite famous. FIFA, soccer, hockey, obviously that's Canada. Woo, go Canada! NBA, basketball, and so on. So Titanfall, another great franchise. So if you are into gaming or you're into sports, chances are you will know these franchises, and that's how popular these franchises are, and that's the more popular they are, chances are they're making more money. And Plant vs. Zombie, so for those who are into mobile gaming, it is one of the more famous games, and it's kind of cute. It kind of targets like I guess a neutral population, but I would say more female than men, if I don't offend anybody here. So yeah, those are the latest titles. So the next thing I did ahead of time was to Google what are the most anticipated games in 2018. So here I show you the Google screen, the most anticipated game in 2018 from EA. So it's just the second link here. Now I keep my Google research really simple. Right now what I'm doing is trying to understand like what are their latest franchise. If I know about them, I'll tell you about it, and what is upcoming. Because what's upcoming is important because that's going to impact when the revenue is going to come in, and if the revenue it's going to come in like in a certain quarter. So if you look at this, most of the games are going to be launching Q2. So if we exclude the concept of pre-sale, which is very common nowadays, then you would expect most of the revenue to come in Q2. So when you think about it, when a product is launched, you have more certainty because now people have played it. They put reviews up to either support or trash the game. But before the launch, there's uncertainty. So most people buy after there's good news, after there's certainty. Once like everything that's bad is cleared. So if you look at this product launch chart, you will see that all the sports game, which is obviously a major driver for EA, is in Q2. So that means if you want to buy before the Q2 earnings release, you probably want to buy in Q1 or like beginning of Q2. And if you are expecting that Battlefront 2 is still a really hit game, or Sims 4 is a hit game, or Need for Speed, then you would want to buy before Q3. So you see what I'm doing? I'm trying to be ahead of all the other investors in investing. So I'll make a video about this later on, but basically, if you know a product is going to be launched, you want to buy before the launch, knowing that the product is going to be good. So, but if you think the company is shit and they're going to make a shitty product, then do not buy before the launch. It's not going to help you out. So with that being said, let's go straight into the chart where we start our analysis. So let me move my face over here. So TradingView, again, free software, and this is a weekly chart for EA. Super simple. Even a kid can tell that EA, it's an uptrend. And let me get rid of this ad here. So when you're looking at EA, since 2014, it has never dipped below the blue line. And it's a straight up trend for 14, 15, 16, 17. Now, right now, you see the price has retraced from $120 down to $104. So this is why John thinks it might be a good opportunity to buy. And right now is Thursday. So that means there's one more trading day before this candle gets finalized. And that is important, but I'll get to that in a bit. So if I just hide the Bollinger Band here, you'll see it's a straight up nice uptrend, and there's only one instance which EA has touched the 100 EMA, which is the red line, and has never touched the blue line. So it is probably uncommon. I probably wouldn't expect EA to touch the blue line based on this analysis, and I probably expect that if I want to buy a stock option for EA, then somewhere between the blue and the red area, like 88 to 76 as my strike price, as my safety point, would be a good buy. Yes, that's correct. Okay, so adding back the Bollinger Band, if that is going to show up. Okay. Okay, I guess my computer is just slow here. Well, so while we're waiting for TradingView, Of course, it's failing me when I need it the most. Okay, it's back. Alright, so if we add Bollinger Band, then you'll see that the Bollinger Band contracted here, and then the price touched it, and it bounced, contracted here, price touched, but it wasn't the best possible price, obviously. You gotta wait for like 2 to 3 waves, and then price touch here, which is above the red line. So now, again, price is touching the lower part of the band, but the main problem is that the band is expanding. Now, okay, now you want to think. It's forming a pin bar. Right now it's Thursday. I'm doing this analysis. So the Friday might change this to not a pin bar. So pin bar usually means reversal. And that is a good indicator that price will continue to go up. And if you look at support and resistance, the latest support is 105. And the next one, I'll plot it for you. So there's one here, which I would think is kind of weak. And there's another one here. Now the chances of EA hitting 86 as support, I believe is kind of low. It's not that common. Unless we're saying that, okay, this whole Star Wars Battlefront II is going to go into a downward spiral and turn into a bigger problem than it is right now. But I think right now, fans complain about Battlefront. EA responded by removing microtransactions. So this means gamers feel safe enough to play the game again. I bet gamers are buying it even though there's so much hate around the game, so much passion and so on. So what are the chances that EA will actually hit $92, which is right here? Now, that means because there's a psychological barrier right here. Between 104 right now and 100, there's a psychological barrier. So this is actually a hidden support line. And there's a 92, which is 100 EMA. So it's really hard for EA to dip below 100, as shown with this pin bar. But then you got to remember, the Bollinger Band is expanding. So that means you can't necessarily rely on the Bollinger Band right now. So it might do something like this, where you have a pin bar back in 2015 November. And then you might do a second wave, and then suddenly it dropped to the 100 EMA. So this may happen, but it's not guaranteed. But I would say right now, the price is fairly okay. So knowing this, it's probably a good idea to look at a comparable company. So what's a company that recently had a lot of bad news, had a lot of hate, probably worse than EA, but then their business model is strong and chances are they'll go up? And what came to my mind was United Airlines. So, I think it's earlier this year, United Airlines dragged someone off the airplane. And in fact, that person was a doctor. They dragged him off the airplane. I realize I have been running facial recognition for a while. Maybe I can turn that off. Okay, forget it. So they dragged a doctor off the airplane, and I guess it was Instagram, videotaped, posted all over social media. It went viral, and then United Airlines, I don't know if they apologized, but basically it greatly damaged their brand. That's the moral of the story. The moral of the story was that it greatly damaged their brand. It's kind of similar to how EA damaged Star Wars and got put microtransactions in, and that in turn damaged EA's brand. So when you look at United Airlines, here's what I'm trying to point out to you. You see this? The first wave down, it goes back up. So you see the Bollinger Band is expanding here. It forms a W. This is super important because usually when a stock price drops, it forms a W. Now, having said that though, when you look at United Airlines, it touches the blue EMA more often, so then you wouldn't use the blue EMA as the true final support where you put the strike price. But for EA, you know that it rarely touches the blue line. So that's the main difference. And you know it forms a W. It forms a W here. And if I go back to EA, now for this one, EA might not have formed a W, but then if you buy it under the first drop, it doesn't necessarily mean EA will go back up right away. So when you think about it, would EA go back up right away? And the chances are no. So that means there's a high probability that EA will form a W. And that might be what you're looking for, John. So I think one of the things John pointed out was in December, there's going to be a spike in sales, so then we should buy before the Christmas. So if we look at Christmas, which is right here, so 2016 Christmas, okay, I'll just hide my face for now. Is there a strike? Is there a spike in price? And the answer is no. So that means just because you buy, let's say in December, which is where we are right now, and it goes through Christmas, it doesn't lead to a spike in price. Now let's go back to 2015. If we go to Christmas again, right here, to December 7th, 14th, 21st, is there a spike in price? And the answer is no, there is no spike in price. Third, 2014, is there a spike in price in Christmas? The answer is within these 3 weeks, no, there is not. Now, so to answer your question, even though Christmas, people might go crazy and buy a lot of EA games, I don't know for sure, but if you look at the last 3 years, there isn't a spike in price in Christmas. In fact, it's kind of flat, and so on. So let's say, remember I mentioned that the new games are going to be launched in Q2. The sports game where basically EA owns the markets. So let's see if June, which is the end of Q2, has a spike in price. So right here, May 15th. This is near the end of Q2, spike in price. Now, let's look at 2017 June here. Again, May. You see this? You see what I'm seeing? May, spike in price. Now let's go back a little bit more. 2015. So we did 2017, 16, now we're going to do 2015. Now, in 15, there was not a spike in price until June 15th, until June. So in 2015 is a month later. Now let's look at 2014. This spike, again, May. So now, this is not very scientific, but I'm trying to point out a pattern for you. In the last 4 years, 17, 16, 15, 14, you usually see a spike in price for EA sometime in May and June. And that's very important because if you expect another spike in price because they release new products like FIFA, like NHL, like Star Wars, not that one probably, Sims, then you probably want to buy before May and June. So they have a dip in April. Let's see. There's no dip in this year. They have another dip in beginning of January 2016. And there's a dip in 2016 November as well. Okay. So Q1 has a mixed result. It's not as clear-cut as May and June where there's always a spike in price. So now the question is, let's say you want to buy before March. Just to be safe, you want to buy before all the products are launched. So you want to buy before Q1. So that leaves us with around 12 weeks plus another 3 weeks in December. Let's say there's 15 weeks. 15 weeks. So if you have 15 weeks, is this enough for the stock price to do a W? Now when I'm saying W, I mean this thing that United Airlines is doing. You see this W? Now if it goes back up to 82, then that will complete the W. Because right now it seems like there's a very high possibility that EA will form a W. And we haven't even touched the financials yet. So it's a very important thing to consider, because if they form a W, then would EA dip below $92? Like, would it touch 92? Because if it touches 92, maybe 95, then it'll be a very, very attractive price to enter, because right now, just using this pin bar, we know that this is the first dip of the W. Let's see when this is. October. That's February. So it's not a clear-cut pattern. And if we know that there's a pin bar in December and there's only 15 candles to go, chances are I would wait. But if I can enter somewhere between 100 to 88 as the price, that would be the most ideal. Now, I stress a lot on the W here in this video, because like the later you enter, which is the second part of the W, then the less you have to wait. And if you use stock options, then there's less time decay because you're more timely in terms of your investment. So it's between 100 to 88 is where I would want to invest in EA. So that is basically the technical analysis side of it. Let's look at the fundamental. Whoops. So here we are, Morningstar. Go to EA, not education group, but electronic arts. So if we go to financials, so again, EA is a growing company. It's a growing company. I don't expect any cash problem whatsoever because they have a lot of franchises. They're really strong. They release one every year. So I focus more on the income statement than the balance sheet. So right now, let me change it to annual. So as you can see, revenue. Okay, I probably should move my face. Okay, I'm just going to hide my face for now. Revenue, straight up growing across 5 years. Net income growing from 100 million to $1 billion. Think about that. Now their year end is March, and right now it's December. That means they have not had their year end yet. Think about this growth. It's crazy. It is crazy. So I'm very impressed by this growth. Net income, again, growing from 100 million. There's a dip in 2014, but I suppose it's not that big of an issue. It didn't really impact their stock price, and it just grew to $1 billion. Hey, I gotta say that is very successful. Earnings per share right now is around $3. The peak is 3.7. Now, okay, let's take a step back. If EA is making $3 per share over the next 10 years, assuming they have the same franchise whatsoever, then it's going to be $37, which is right around here. And if they're going to continue to make the same amount of money with no growth, then it's going to be $60. And again, right now we're overvalued. Obviously, EA has a lot of strong franchises. Whoops. I don't know why I keep activating that. A lot of strong franchises. So that's why it's similar to Starbucks. Price is almost always going to be above the 20 times earnings per share, which makes sense because, of course, they are the gorilla of the industry. So, okay. The 5-year balance sheet looks great. Nothing really weird going on. Obviously, they have research and development. I don't know how much is capitalized versus how much is expense. But, okay. This is interesting. Now, let's go back to annual. Let's take a step back. Net income, all positive, you see. And when I go down to quarterly, it actually fluctuates a lot more. This is important. In fact, last year's December, they lost money. Isn't that interesting? Now, Does this make sense? And in fact, it totally does, because EA launches most of their games in Q2 and 3. So now, of course, right now pre-sale is really popular. So this is Q1 in my world, but it's actually their year end. They have pre-sale for all the like sports game or whatsoever, so then they make money here, and then afterwards, again, they have all the Q3 games are released, so then people might buy, or like the sports game that are launched in Q2 are also purchased during this time. So again, I expect these two to be in profit. So basically, you see this wave like negative, positive, positive, and then negative again. So then, okay, we gotta think. We know that Christmas actually does not help EA that much. It's more about the timing in which the game is launched. And you can see this pattern clearly here. And this is why there's always a spike in May to June, because maybe it's right after they release the year-end earnings, because usually public companies get a month or two. So after your year-end in March, then you have April and May. So then people might buy after they get the year results. So again, right now we don't have the December data. It only goes up to September. But what's important here is that I'm just thinking right now, is that if you take out microtransactions for Star Wars Battlefront II, then I would expect the revenue to go down. And recently I have been paying attention to video game news, and I know that one of the European countries, I think it's Belgium, can't remember exactly, actually banned loot boxes. So loot boxes is like a chest that when you click on it, you will get a bunch of random items, and there's no guarantee whether you get it or not, but the more chests you open, the more loot you get. And right now, I think one of the European countries, maybe is Belgium, has banned it because they think you're encouraging bad behavior in children. Of course, there's more restrictions, like only for children. So if you're an adult and you know what you're doing, then you'll continue to get loot boxes and so on. So by taking out microtransactions for Star Wars II Battlefront and Belgium banning loot boxes for children, that actually might impact EA more than you think. But the thing is, I know about this news already. That means it would have been reflected in the price. Like people who are smart, like mutual funds and so on, they would have already built it into the price, which is why they're shorting it here from 120 down to 104. Okay, so I think we're good there. So I think in the income statement, we're fine. It's not great, but then we're able to see the seasonality, which is fantastic, which is what I expected when you look at the product launch schedule. Let's look at balance sheet. Again, $4 billion of cash. Wow, what is this madness here? Of course, there's no inventory because I don't know, everything is digital now. And then property, plant, and equipment, there isn't a lot. Now, goodwill, this mainly relates to without even looking at the financial statements, this mainly relates to the companies they acquired that has games in it. So when you acquire a company, of course, you got to record goodwill or the intangible asset, which is like the brand name of the game. But then you notice that it doesn't increase over time. So what this means is that when EA develops a new game, internally, they don't recognize it as goodwill or other intangible asset, which is a good thing. It means they're conservative. And I like that in a company when they don't capitalize their R&D, because it gets really gray. So compare with a company that keeps capitalizing their R&D, their income will be a lot higher, but then over time you gotta take more depreciation. So in EA's case, they actually did not capitalize on their research expense, which is fantastic. Good job. Okay, moving down, liability side. So now, before I even look at debt to equity, which you know I'm going to, look at the amount of cash they have versus the amount of liabilities they have. This is crazy. They have so much cash that they can pay off their liabilities. Basically, they don't need it at all. Look at retained earnings. 100%. Well, okay. Yeah, basically positive, and their debt to equity ratio is around 0.5. Now, usually I'm happy if the debt to equity ratio is 1 to 1. And so, okay, let me take a step back. What it means is they are not levered. So if you have $100 in your bank account, EA only borrowed 50. But usually what I expect in a company is that if you have $100 in your bank account and you borrow another 100, so you have 200, that's good. So they actually borrowed less. They don't have that much debt on hand. And that is fantastic because this means they are a healthy company. And I like that about EA. So before I move on, I just want to say for the last 5 years, EA grew from 1 million. Let me get a facts rate here. From 100 million to 1 billion. Now the real question is, do you think 2018 it's going to beat 1.2? Do you think 2018 is going to beat 1.2? And that's actually a really good question. Eric, good job. Thanks for asking that question. So if we sum up these 2 quarters, because of course I'm an accountant and I actually need to do math. 644 minus 22. So last year's December was -1, so let's be conservative and go like -20. And then if we add 566, which is exactly what they made last year, that only gets us to 1168. And given how negative people are reacting to Star Wars, but EA kind of reacted to it in a positive manner, I don't think this year's income before taxes would beat last year. So that might be a point. That's a negative point. That might be something worthwhile to think about before you invest. Because I think it's really hard to top this number given the speed of its growth. Like it might do something like, let's say 2015 it was 900 million and went down to 877. So it might go from 1.2 billion to maybe 1.1 billion. So you gotta remember, it might not necessarily lead to an increase in net income. In fact, when you look at the 2017 net income, I was actually looking at income before taxes. They had a higher income in 2016 March than 2017 March. So it's not always a straight uptrend. Okay, it's good to keep in mind. But other than that, EA's balance sheet is extremely strong, ton of cash, very little debt. Super happy with that because they're not levered. And when you think about it, there's really nothing else you can really complain. I mean, can you argue that there's impairment in the goodwill? Chances are maybe yes, probably not. Okay, so moving on. Valuations. Okay, just give that a minute here. So, bam, price to earnings. Look at that. 27.2. And industry average is 40. Now, okay, you got to remember, EA is a tech company, so then probably the industry average is that nobody really makes money, or a lot of people make very little money, so then that drives up price to earning a lot. And given how established EA is, that's why EA has a lower price to earning ratio. So it doesn't mean that EA should have a price to earning ratio of 40, because when you look at tech and software companies, they make a lot less money. So then even like if you have a very small net income and your price is high, then that leads to a very high price to earnings. Price to book. Now, EA has a higher price to book, and that makes sense because they don't capitalize on the new games they develop internally. They expense all the R&D costs. So that means, of course, your price to book will be higher because for a company, I suppose the industry, some companies will capitalize their R&D, and that makes sense. Okay. Price to sales. Now, this is really the main indicator. Now, EA is only a little bit higher than the industry average, which is fantastic. I think that is great. If anything, I think it means EA is fairly valued or undervalued in this case. Price to cash flow. Again, wow, EA is undervalued in terms of price to cash flow. I'm kind of surprised. And no dividend. That is fantastic because it means if we buy stock option, we have one less thing to worry about. Okay, so far valuations is a pass. Okay, let's look at my computer is running out of battery here. So let's look at insider activity, and let's hope they have some insider activity. So now this is important now because look, CFO, executive vice president, sold at $100 a million in value. Sold at $100. So let's take a look. 100.274. That's actually very recent. Right here. That is actually very, very recent. What's happening here? I'm not looking. Oh, that was 2 days ago. This is really updated with very little time lag. Wow, they're really shorting it, eh? So if the CFO sold right here, which is at the bottom of the pin bar, okay, this is not a good sign. That's why I was surprised. So someone else, CMO, sold at 105, 106, 105, 106, 105, blah, 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 back in November 20th. So let's take a look. 105, 106, back in November 20th. So right here, wow, their internal company is just shorting this stock. So you gotta think the internal management, CMO, CFO, CEO, right here, CEO Andrew Wilson, are shorting the stock right here, right now. And they have been selling it. Here, another 1 million. You see that's 1.2 million, 1.3 million more so. Okay, let's do some quick math. 1, 1.5, 1.8, 2.5, 3, 3.8. That's like 5 million. So they shorted 5 million worth of stock within this period. So it makes you think, because obviously the CFO knows more than me and you. Oh no. Okay, I'll try to wrap this up. The CFO knows more than me and you, and he's shorting at $100, 104, 105 bucks a week or two ago. So this is a really negative sign. And the people who are buying here are just buying because they think EA drops too much. But management doesn't think so. Management actually has a more bearish outlook than the people who are buying externally. So this is a contradictory signal. In fact, let's go back another step here. Yeah, they have been selling it for a while. So that is usually a pretty bad sign. We don't know when they're going to buy back. If we look at the holding summary, obviously the CFO has 18 million worth of EA. So if you offload $1 million or $2, it's actually not that much. The question is though, would they buy it back? If the CFO is exiting at $100, they'll probably want to buy it back at around 92, closer to 84. So then there's like this small margin room. Man, I was gonna say EA would be a good buy. I would recommend buying it. Like, it totally makes sense. But then now seeing the insider activity, I'm not so sure anymore. So I would say my confidence level is around 70. What I would do is seriously wait for the W, because if you look at United Airlines, they have a W, and if I look at EA, it's just coming out from a top right here, like this is a round top, and chances of it forming a W with the second W hitting around 92 to 90, 92 to 86 is really, really high. So if I can get in somewhere between this price, then I think I would go with stock options, and I'll put the strike price at around 76 to 80. So I'll wait till it hits the red line, which is 92 to 90. So you got to remember the red line is going to keep moving, so chances are I'll aim to buy it at 895, but the second time it reaches this area. So because right now I think it's too early, I wouldn't go to NASDAQ and do the stock option analysis, but the strike price you're looking for is probably 84 to 80. Maybe, yeah, 84 to 80. And then you would buy it at a 2-year term. You know what? Let's do it. Well, let's hope my computer has enough battery and doesn't shut me off, or else I'm going to lose all my data. It's pretty tight here. I only have 7 minutes left. So, okay, there's 2020. So right now it's 1819. So that means there's the 2-year option. So, oh, whoops, wrong one. Well, I feel like I'm going to get cut off really, really soon here. Okay, so 2020, perfect. So if I were you, chances are I would buy the 2020 option, give EA enough time, and I wouldn't enter until the price is closer to $90. And the option strike price will be around 75. And that should give EA sufficient wiggle room to gather enough stocks again, so then they will go up maybe a year or two from now. Remember, it's always better to buy a longer option and let the price beat your expectation than the other way around and running out of time and try to scramble. Okay? Good luck. Let me know if you have any questions.